Hey guys, Nancy here. Hope everyone's doing well. Thanks for joining me. Looking to some more MTG Magic. And yep, it's been about a month since I last made a post. Yeah, sorry, it's mostly just from my side. There really isn't much happening as far as the Magic world goes, and I've kind of lost touch after Wizards of the Coast just messed up the entire situation for the last couple of months. So, spoilers, etc. I haven't really kept tabs on it. They're obviously going to continue printing overpriced and overpowered cards. They're going to make more and more commander decks until literally commander decks are nothing special. They're just going to kind of just drive it into the ground as far as I can tell. But that's not really why we are here. The main reason why we're here is to figure out what's going to happen with reserve list cards, especially when it comes to collectibles, and what's going to happen to the market as a whole, judging by what's happening in the economy right now. Now, I don't know if people know about this, but there's been a big banking crisis where the Federal Reserve or the US Bank, Federal Reserve of the central banks, and Treasury Secretary Janet Yellen, and I think the Biden administration have come together and said, a couple of or three big banks, SVB and a couple of others, are too big to fail. Again, we've heard that in 2008. Now we're hearing it again in 2023, and that they're going to not bail out the shareholders of those banks, but they're going to bail out all of the customer deposits. Now that is not good because the way that it works is FDIC, at least in the US and in Australia, have a $250,000 security protection, which means if you have $250,000 in any bank, you are secured by the government to that money. But any money above that, you're not secured. Most banks should work like that. But after the central bank's issues in 2008, they did a too big to fail thing where they had to bail out a bunch of banks and they even bailed out the shareholders. Now, what's happening in this situation is they're bailing out the banks and then keeping them alive by telling everyone these are not going to fail. And because of that, a lot of the people in the small banks that have more than $250,000, especially business and stuff, are now starting to wonder, our bank in the regional banks and the small banks aren't going to get the same level of protection as these big banks because they're too big to fail. Why don't we just take all the money out of these small banks and put them into the big banks because the government's going to backstop it? Now, here's the problem. When you do that, you make a bank run on those regional banks and you cause those banks to crash, consolidating the amount of money that these big banks make, which means the big banks will go up in value for their stock prices, most likely. And you're creating money out of thin air because for every deposit that goes into these big banks, you can expect the inflation to increase because that money doesn't actually exist because the banks have already loaned it out. Which means if anyone wants to make this money, they're going to go out of their way to actually make it. So we're going to be really, really interested to see what happens in this next Federal Reserve meeting that comes out on the 22nd of March. Everyone really keep an eye on this because if they say anything about a fear of a banking crisis, or they mention that they're going to pause anytime soon, that they're going to lower rates, they're going to reduce to 25 basis points, or they're going to not make a move next session, oh boy, that is going to make everything go up. And I think the markets are actually reacting to that. The reserve list markets, and that's crazy. Now, Bitcoin's already ahead of the game. From the 11th of March 2023, it's already gone up from 20,000 all the way up to, oh my God, 40% gains. Now, here's the thing. I didn't buy Bitcoin because I don't trust the Bitcoin moves as easily. It's also very much regulated anyways. So instead, you can buy a very direct proxy to Bitcoin. Now, this is not any financial advice or anything, but I'm just saying there's a proxy to Bitcoin that'll get you better returns, but is more risky. What is that proxy? It's Mara by the Lightning Guy face in whatever. It's a very crappy company owned by a guy that literally just bankrupted himself a couple of times. And you can see in that same amount of time, it's gone up by 63%. Nothing crazy, not like the insane moves from before, but there is an upward trend with a headband coming up. So you want to really keep an eye on this. Berkshire Hathaway is being in comms to talk about acquiring the big banks as well. or the banks that are failing. So we're going to have to keep an eye on this. So that is financial. Now let's have a look at the markets, and we'll move through this quickly so we can have a look at the reserve list lands. So starting with modern, we're going to have the biggest drops is Emrakul. No, sorry, the biggest gains at Emrakul, the Aeon's Torn, 10% gain for $17.52. Chancellor of the Annex, 35% gain for $5.37. Nothing too crazy. Mia Matrix is now saying $35, almost $36. Crazy card. I mean, sorry, crazy to see that card doing that. I had that card. It's not that amazing. But if it's a Mia, I guess that's what it makes it amazing. Chroma's Memorial, 7% gain to $24. And 9% gain for Engineered Explosive. Whatever, $14. Nothing too crazy. Biggest drops, nothing over 10%. The biggest one is Grinding Station, 8% drop, now sit at $3.37. Moving over to Pioneer, you got actually quite a bit of movers in here. Gishat Sun's Avatar, 22% gain to an asset at $27.71. Mana Confluence, 12% gain to an asset at $33.49. And Fiend Artisan, 17% gain to an asset at $14.94. You got Eseki's Chariot at 10% gain to an asset at $11.28. And Tifari, Master of Time, at 12% gain to an asset at $9.95. Univolt at 14.99, a 21% drop, and Lyra Dawnbringer at 18% drop, now sit at $5.39. Pretty impressive drops, actually. Moving over to reserved list as a whole, what has it been doing ever since 10th of March? It has gone from $126,000 to $135,000. Should we read a lot into it? Nah, not really. It's a bit of a bump. This could be any kind of things that moved it. It's really hard to tell. So ignore that. Moving over to the reserve list itself. What do we have? A bit of a bump from the 12th of March, 13th of March, from $5,757 to buy all of the reserve list to now $5,868 to buy all of the reserve list. Once again, not really directional, not really telling us much. What about in MTG Stocks and TCG Player? So MTG Stocks, once again, March itself was when they started moving, but what are we seeing for TCG Player? We are seeing a lower number of cards and a higher, or at least it feels higher priced. And you guys can let me know, but I feel like this moderately played for $765 is actually quite high. And that's the lowest I can find. $778.99 near mint is better value. Literally, for $15, you can get a better value. But yeah, it's crazy to think about that as being the one that you want. Moving over to Badlands, once again, you're looking at heavily played for $321. Nothing too crazy. It's been quite stable, but you can look at a lightly played for $342 and near mid for almost $400. Bayou $327 actually took a massive dip. What is TCG players saying? Heavily played? Nah, not really. Big drop off. Actually, quite a massive drop off. For Bayou, lightly played for $292 actually feels pretty decent. Not all of these are equal. It's important to remember that. Savannah, $351. Actually rising, yes, slightly ever since January. Moderately played for $349. Once again, nothing too impressive. Scrublands, flatlining by the looks of it. Moving over. Oof, that is not many Scrublands left at all. Or at least many locations that are selling Scrublands. And not many chances for near mint or lightly played. There you go. I don't know if the liquidity of Magic cards is actually draining out of the markets, but it certainly feels like the prices are not dropping very much, and yet all of a sudden there seems to be less available. Right? Let me know in the comments. This is really weird. And it makes sense only if people are preparing for QE, quantitative easing, start up again just like it did in 2008, but now everyone knows it is a liar's game, and if they do QE, it causes inflation in financial and assets, and your money in the bank actually gets devalued. Ouch. Yes, it's true. If they do QE and raise interest rates, the Federal Reserve and central banks around the world are idiots, and they will be called that. So it's very important to remember that what happens in 3 days' time is important. We'll have a look at the We'll have a look at the stock market again to show you what critical lines it's been hitting over the last couple of months or last month, and why the next 3 days are probably some of the most important ones that are going to play out. Lightly played for Tiger, $307, quite impressive. Quite low actually. Tropical Island still dropping, flatlining on TCG Player. You want a lightly played, most likely $589.95 on the high end. Tundra, don't know, $371 is what it's saying. What is Tundra going to give you? Quite a bit of a flat line starting here. A lightly played for $445. Still seems on the high end for that. And last, Underground Sea, sitting around about $770. What is a lightly played? $765.51. So, there you go. Is there much movement? It doesn't feel like it, but let's move over to some of the big stuff and see what the markets are going to do overall. So, S&P 500, massive drops in the last couple of days. Really, really aggressive. And you can see, what are we sitting on, or what are we just falling below in this market? We try to break above the 200-day moving average, but we failed. Every single thing is failing. And this was the golden cross, if I remember correctly, when the 50-day, I think that's the red, I think. The red breaks the 200-day. And ever since then, you should not need to worry about them. It should be a bull market, but it failed. It really did fail, that test. And now we have this really weird falling market. Now, also, here's the thing, and this is something that's really weird to think about. Wait, I should go to the S&P 500. I don't know why I went to the SPX. See how I drew this weird angle thing ages ago? Where's my white line? There it is. Okay. Guess what it's doing? It tried to bounce. It didn't make it. It then dipped under. It didn't stay under. Now it's on the line in between the 200-day moving average and this downwards facing trend line. This is super important. If it breaks below this downward trend line, we have a long way to go, and it is not doing it. 18%. We have 18% to go. But if it breaks above this, guess what? We have 9% to go. So these are both big moves up. Crazy amount of volatility that's going to come in the next couple of days. Let's move over to the dollar index. Very, very volatile. Very unusual for things to be this volatile, truthfully. Yeah, I think we do really need to keep an eye on what's going on here. Come on. It's probably because I'm downloading some games in the background. Getting back Fallout. Okay, so getting back to DXY. What is DXY doing? It's trying to bang its. Well, literally, at some point I drew this line, which pretty much said it was going to go up to like 106. Never made it there, but it did break out. It did go pretty far out. If you really want to calculate how far high it went up by almost 5%, which in the dollar is quite impressive. It is above at least the 50-day moving average, but it is showing weakness as well. So once again, is it saying that QE has started and the Federal Reserve is going to pause on interest rates? Oh my God, if they do that. Gold. Gold is hitting a upwards trend line head on, resistance. Very, very dangerous. Peter Schiff is all about gold, but look at this. From 2018 to now, this line has stayed true except for one time in May of 2022. So May of 2022 to June of 2022, that's when it failed. Every other time this line has been tested, it's worked. Guess what? I think we finished above it. We finished above it. That's a good sign for gold. It's a bad sign for the dollar, but moving over to Bitcoin. Once again, Bitcoin is doing really well, but like I said before, if you want to play Bitcoin and you don't trust Bitcoin, why not just buy Mara? No financial advice. Moving over to the VIX, very volatile, lots of movement up and down, but it ended the day below the 200-day moving average. Does that mean it's going to stay there? Who knows? US 10 years, ended the day below the 200-day. Oh my God. If this is true, I'm so tempted to lock in with my bank a 5% term deposit for a year. I don't know, like if this is true, what it's pretty much saying is in the next 10 years, the interest rates are not going to be higher than 3.436%. And if that's the case, then if you can lock in a long-term term deposit for higher than the US 10-year yield, you're going to be actually making more money than you would if you didn't do that, because then the bank will lower the interest rates, the savings rate. So term deposits are a long way to a way to lock in the rates at that time. So you might be able to make some money here. But why would they lower interest rates? Why would the US 10-year think that? It's because we have a recession in that horizon. That's why. US dollar, sorry, Australia to USD finished above $67, but it's below the 200, but it's also strengthening on the RSI. It's actually done a cross. It's a perfect cross. And did I expect this? The markets kind of predicted it, but at the same time, I feel like they're too preemptive. I don't know what the Federal Reserve. See, this is a Fed press conference, 22nd of March, 23, 6:30. Very important. Oh man, very important. You guys are going to have to keep an eye on this because I think it's going to be on your time. US oil acting like there's a recession. UK oil acting like a recession. XJO acting like there's a recession. That's the Australian stock market. Silver acting like there's a financial crisis. Copper acting like there is an issue with copper. It's above the 200-day moving average, even though that's downward sloping. It isn't showing signs of strength, but I guess the world just needs copper, so copper isn't really willing to just dump like there's no tomorrow. Amazon showing weakness. I don't know what this is, but obviously that's not doing too well. I don't know, BAE. Yeah, that's okay. I mean, it's a defense company, so as long as there's danger in the world, then defense companies will do fine. Meta bounces down off the 200 dollar market, and it's showing weakness in the RSI with a higher strength. It is going to dump. Why? I don't know, but the markets say that. Dow Jones Industrial maybe make a head and shoulders, but probably dump. It is below the 200-day as well, so it's going to be tricky to see what happens on Monday. But don't forget, over this weekend, there's been a lot of things said about QE. Now, when QE is announced, QT is cancelled. And QE is another way to lower interest rates and pump the market up with easy money. When that happens, people buy stuff because their money otherwise loses value. If they do QE and they do interest rate hikes, they would be called idiots and called out for that. If they do QE and then they stop interest rate hikes because they're worried about something in the future, the markets may actually freak out a bit. And when the markets freak out, I actually don't know what they're going to do. Usually when the Federal Reserve does a pivot, market crashes by about 50%. But people are preemptive about that. So the pivot has to be for a very good reason that actually scares the pants off the markets. And we're not going to know what that is until the Federal Reserve comes out with their meeting and possibly their meeting minutes 2 weeks later. Anyways, guys, I said a lot, but I'm not too sure how much people actually got. What I'm saying is 22nd of March, very important. And then 2 weeks from then, when the minutes come out, also very important. Keep an eye on what the banks do and see what happens with the market in general. What I'm expecting is, at least as far as I can tell, it doesn't look good for the markets, but if the Federal Reserve and the Treasury Secretary and the administration, at least in the US, have come out and provided enough support by blowing a bubble, then we can see the markets really take off on Monday, even though everything looks really bad and the dollar to tumble and everything just goes crazy like it did for the first couple of months after they announced 0% interest rates and quantitative easing for the pandemic. Anyways, guys, thanks for watching, and let's see what happens in the next couple of days. Okay, I'll see if I can keep you guys updated. Anyways, have a good one, and see you guys next time.